Holiday. There we go. Welcome to the closing beat, everybody. Happy Friday. We made it. Holiday shortened week here. The market's finishing positive on the day. We're going to cover all of that. We're financial advisors here at Jazz Wealth, and we manage long-term retirement accounts. Happy to help in any way if that's something you need help with. Our focus is we'll work with anybody. If you have $100 or $1 million, we're going to work with you in the same way, give you the same advice to help you grow your accounts, whereas all the other advisors, they really just kind of want to work with the wealthy already. So we'll get you covered there. Check us out at jazzwealth.com. If you missed our Wine and Wealth class last night, it was awesome. Went through an unbelievable study about how to make contributions to your account and get an advantage by simply just changing one thing, not putting more money in, by the way. That wasn't the secret. And next week, Wednesday, our dojo, our customers begin an email for that, where it's our video library. So you can watch every single Wine and Wealth we've ever had. I've been putting more videos on there, more tips and tricks, of course, but you're not here for that. You're just here for the market update, so let's get started here. Positive day. So markets finished higher on the week there. The Dow, that number doesn't seem accurate there. So we got the Dow higher by 175, the S&P added 25, and the Nasdaq higher by 91. The chart at the bottom, that's correct. So you could see very strong start to the day. The government shutdown news helped us hold those levels, but really that wasn't, the markets were already higher. That just kind of helped us hold our support up at that level. Basically, let's take a look real quick. Let's just dive into this, Quit messing around. It's Friday. You guys got things to do. So the S&P, we're finished right at the technical resistance area. Not a bad week, actually, a little bit back and forth, but we finished right at resistance. So it's going to be a very interesting week next week with all the earnings coming out. There's over 100 names in the S&P reporting earnings. A whole bunch. We'll cover them all. But we are now 15% off of the lows. So if you happen to follow along this sort of thing here, you got, there you go. You got from the lows to here, that's 15%, only another 10% to go, and we'll be back at all-time highs. So whatever you got to do to cheer the the market higher by 10%, we'll see. Now, government's going to reopen, I believe, tonight, so everybody starts getting their back pay for those of you that were affected by that. And Trump basically said, hey, we're going to reopen until the 15th. If we don't have a deal for my wall by then, we'll either reshut the government back down, or he's going to do the national emergency process. So he made that very clear that that's what he was going to do. February 15th is the last date for this deal, or the government shuts down, or he does what he's going to do. So we'll see what happens there. All in all, if you're looking at the charts here, the market's really held up, to be honest with you. We had a lot going on. We had trade news come out, basically said that we're nowhere near a deal with China. We have this government shutdown thing affecting us. Airports were slowed down today and everything. And the markets shrugged it off, right? We've had okay earnings. Not great, but the markets have shrugged it off. So all in all, looking strong here. Someday I'm going to send an email out to customers why we're not going higher. So just to give you guys a little perspective on that one, we'll go over, of course, the stats and the history and everything. Next week, of course, is earnings, so be ready for that. Like I said, 100 companies reporting. Here's a quick look at the Dow, almost back to the 200-day moving average, and the Nasdaq recovering almost all of the week's losses, finishing near highs. So again, shrugging off any bad news as it comes in. We're in that sort of phase where bad news is really not that important. We're all focused on earnings as far as investors out there. So pretty interesting. I think next week will be a real interesting one here if you're a short-term trader or you just like to keep track of what the markets are doing. That's the broad-based indices. Let's go over to the individual areas of the market. The dollar sold off. Gave back all of yesterday's gains. Now that might not be all that important to you, but what is important is it attempted to rally and could not get above the 50-day moving average. That's seen as kind of like a midterm resistance area, and so you're really going to start convincing more and more people that the dollar is really pulling back. Remember, going back here through December, we saw the dollar pull back, and we were talking about where do you look for? What investments do you look for when the dollar is weak? We covered the whole thing there. Well, this last rally here is becoming rejected. So because of that, you had gold hitting new highs on the year. Here's the gold futures contracts up to new highs for the year. Gold mining stocks had a great day, by the way. I'll use GDX to show you that one here today. It's the most popular gold mining ETF if you like to follow that stuff. Back above the 200-day, very solid day today, 3 1/3% gain on the day. Also, your metals and mining, if you follow that sort of thing, more convincingly coming up off of the lows here. So, hey, looking pretty good there overall. The dollar as we said, couldn't get above the 50-day moving average. That'll be a focus point for traders that like to talk about that sort of thing. Other news, you got the semiconductors, another strong day today, added almost 2%. That makes that's 8% in 2 days. Very strong move. That will not go unnoticed. Remember, yesterday's move was the biggest move in over a year, so 5.75% yesterday. Today, adding to that 8% in just 2 days. That gives it a 4.5% gain on the week. Remember, we sold off earlier in the week, so recovered all of that and then some. That's going to lead the way as your strongest sector here for you. Real estate, by the way, if you're interested in more of a technical look, what you have in real estates, all the REITs, ETFs, things like that, they're basically all the same. That's called stop losses. So what we have here is a quick rally off of the lows, and you had a lot of traders thinking, okay, we'll pull back and I'll make some money on the downside. Well, they use the prior highs as their stop loss, meaning the point where they'll admit defeat and buy their positions back. Add to that the normal buyers that came in today, and you have a recipe for what's called a stop loss day. Here's the ICF, if you like to follow that one. Also, very, very, very similar type pattern there. So if you like the technical stuff. Well, continuing with the technical stuff, you had home builders attempt to break out above this range. We pointed out earlier in the week. It was rejected again today. I don't think it's over just yet, but you could see how we moved into that 36 area and people decided, oh, hey, it sold off there before. Maybe it'll sell off there again, and today it did. Still added 0.5% on the day, so that's not bad. You had earnings there as well. We'll cover that in just a second. Let me go to oil real quick because we've been talking about the $54 area for the price per barrel of oil. This is the crude oil futures contracts looking at March here, and back to 54. It's trying so hard. We actually had an increase in the stockpile of oils that was announced yesterday, and it really didn't affect anything. So oil really seems to be holding up, just like the overall markets. Get a little bit of bad news in there, it tries to beat it down, just can't quite get it done. And we're looking at a few areas we don't normally look. Emerging markets headed back into the 200-day moving average. That gets on record here for breaking out of this range. So you got this range. Remember how we've talked about sometimes where stocks sell off, sell off, sell off, sell off, and then all of a sudden you notice that the market gets weak, or a certain area of the market gets weak, but this did not. Micron, eBay, all good examples of that. Well, it's the same here in the emerging markets. They're trying to come up off the off this bottom here, and today was a good day for that one, up about 1.5% on the week. So that's all I have as far as individual sectors. You had retail also had a good finish to the week there, 1.5% on the day. Communication services, also a good little move there, but still within the range, nothing really notable to point out. And banking stocks, by the way, in particular the regional banks here. Oh, let's see, let's get better together, time to upgrade your blah, blah, blah. Not going to do that now. So that's all I have for sector-related news. Off to individual stocks. We talked about home builders. Here's DHI is the symbol. I call it Dr. Horton. Stock was down by 2% on the day today. Company missed on earnings. They beat on revenue, but they said, hey, higher prices and higher interest rates have helped show a little downtick in the demand for brand new homes. Doesn't matter. Shares are still higher by 10% on the year, even though it doesn't look like it. 10% gain on the year, almost 9% gain on the year. And I dug a little further on this one. It is the 12th best performing stock in its little category here. Home builders, right? In its little industry. Earnings growth for this one is expected to be about 11.5% over the next 5 years, annualized, or 11.5% a year for the next 5 years. I wondered, is that good? How are these guys doing compared to others? Well, I know they're in little different categories here, but if you look at Lennar, they're also a home builder. Their expected growth rate is only 4%. So you go, oh, hey, well, DHI looks pretty good here. If we go over to Beazer Homes, symbol BZH, same thing, 4% expected earnings growth over the next 4 years. Who's the leader? If you follow home builders, the leader by a large margin is Pulte Homes. The symbol's PHM. Their expected growth over the next 5 years as far as earnings are concerned is 39%. So you can tell where investors are really thinking the opportunity is there, or at least where the company thinks there's opportunity. Anyways, Colgate Palmolive, you guys know the company there. Symbol is CL if you want to follow along with that. Traded in a wild range today, ultimately finishing lower by 0.5%. Company beat on earnings, they beat on revenue, but they said they expect to see slower growth rates for 2019. I had some fun, dug into this one here. This is the 5th best performing company from a fundamental perspective in this category. You know who the best performer is, by the way? This was sort of shocking. Avon. Avon is the best performer in this category. It's a $2 stock, so obviously they're redoing some things there, but that leads the way there for that one. Starbucks, we covered this yesterday. Higher earnings, higher revenue, higher sales, higher China sales, higher U.S. sales. Lots of good going on here for Starbucks. And for that reason, you can see how strong the stock is. It's only 3% from making new highs there. So one really good day, and this one could be at all new highs. MasterCard in the news. They it's kind of a cool story. They stole a deal from Visa. So there's a payments processor out of the UK. Did I write down what they were called? Earthport, if you're familiar with them. MasterCard's going to buy them for $304 million. Visa was working on that deal. Interestingly, both stocks were higher on the day and hinting at a little breakout. If you look at Visa here, this is this little consolidation right at the 200-day moving average. You always like to see consolidations above the 200-day moving average. You're getting that here, although today wasn't the greatest news for them. Still looks like it's trying to break out, and of course MasterCard has room back up to 210 if you follow along in a short term. A couple other things I'll go over, and then we'll see if you have any questions. Facebook higher by 2%. A lot of news out of Zuckerberg today and what Facebook is doing with their messaging apps and kind of putting them all together. He also defended the privacy issues. That's got to be frustrating for him. How many times can a man say the privacy issues or privacy concerns of each individual user are up to each individual user? They're using the data, of course, to sell ads and stuff, but you can control that, and he's been trying so hard to say that. You know what it is they put it so deep in the platform, everybody's lazy. They don't want to go turn off their own features. They're like, oh, this is too hard. I just want to complain about it. So Mark Zuckerberg, the CEO, of course, of Facebook, was trying to say that again today and in a nice way. He was trying to remain calm about it. Anyways, stock higher by 2% today, continuing to work out of this bottom here. A couple others. We got Alaska Airlines reported earnings down 3.5%. Beat on earnings, basically in line with revenues. They raised their dividend by 9% if you happen to like that sort of thing. Amazon reportedly is starting to ask suppliers to make Amazon branded products. That should be no surprise. I mean, that's really what their goal is there. Discover Financial still gained 1% on the day. They missed their earnings. Revenues were okay, but they reported larger than average loan losses. So the stock did wiggle around a little bit there, ultimately finished higher. NVIDIA, there's an analyst at Jefferies who had picked this as one of their top picks. He has since changed his mind. He says no longer is this a top pick. He took it off the off his list there. And Western Digital, Western Digital, great day, 7.5% on the day. They missed on earnings. Revenues were good. They said going forward for the second half of this year, they expect to see really, really strong growth. And so because of that, you can see that sort of downtrend there on the charts officially broken today. Next week, we have Caterpillar on Monday reporting earnings before the open, so that'll provide a little fireworks to get things started off. And then Whirlpool's kind of really the only other one. They report after the close. So, that might be interesting. A couple other smaller names to get us started for the week. You also have a Fed meeting starting on Tuesday. Wednesday will really be the excitement behind that there. So that's it. We covered the broad-based markets. We covered the sectors, or at least things that were interesting sector-wise for the day. And we also covered individual stocks. I love it. Joseph says he's new to the channel. What colors are the 50 and 200-day moving average? My 50-day moving average is always blue. The 200-day moving average for me is always red. No matter what chart I use, whatever I like to put it up on, I like it. That's what I look at. Yep. Scrolling back a little bit here, 28 says if you were to use your company, what do you need to have ready when you call to streamline the process, such as what questions you'll ask and have everything prepared for that? You can actually do everything online. If you want to schedule a call, of course, I'm happy to chat with you. But basically, where you're at, right? Are you just starting fresh, or do you have existing accounts? If so, where are they, and if you're happy or mad about them or something. And then that's pretty much it to get us started. We'll walk through the rest on the call there. No problem at all. Don't be nervous. Does the market generally go lower when the government reopens after a shutdown? No effect. The actual effect on government shutdowns tends to come in the next earnings cycle. However, investors really have already started planning for that. And so you see the bar being lowered on a lot of stocks right now in anticipation of that. So everything is essentially, Browsy, already priced in. David says, couldn't make it to the Wine and Wealth last night. I'm getting tired of you missing stuff, David. No worries, man. That's what the new dojo is all about there, and we'll be coming out on Wednesday. I'll be emailing customers over the weekend, of course, with some good stuff, but also to give you the heads up on that. That's all I have. It's back to work for me. I know a lot of you are done for the weekend. Enjoy, have a drink for me, but I'm going back to work, and I hope you enjoy the show. If you do, maybe you'll hit the subscribe button just for funsies, you know, click. All right, see you guys later.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.